IQ. We're going to try to give you insights on some stocks which are buzzing in trade, one of them being IndiaMART InterMESH. The company delivered a good set overall in Q3. You saw sales up roughly 20-odd%. You also saw margins getting slightly better, which was a positive. Profit after tax was down, but that's due to certain one-offs as well. To try and break down, and understand the numbers a little bit better, we have with us Dinesh Agarwal, who's the CEO at IndiaMART, who's going to join us now. Welcome to NDTV Profit and good afternoon, sir. Can you hear us? Just wanted to check. Okay, it seems that he's unable to hear us. We're going to try and fix that issue. But even in terms of the way in which the stock has moved up 5% in the day, it's a positive reaction because muted set was expected from IndiaMART. The margins were expected to be largely flat, but it's gone up by 50 bips. We have with us Dinesh again. Let me quickly check in. Sir, can you hear us?
Yes, I can.
Okay, excellent. So firstly, welcome to NDTV Profit. I want to try and understand, what are the kind of trends that are playing out. You've increased prices on your front. So how are customer additions coming through? What are the expectations going forward on these higher prices? Do you continue to expect a good run rate in terms of customer additions going forward as well?
So as I said in the earnings call also and last time also, that last year we had about 30,000 plus customer added in the entire year, which was highest ever. I think the churn expectation that we had from the first year customer, that is coming out to be more than expected, and which is causing the net customer addition to be subdued for the last 2-3 quarters. This quarter also we have added about 1,800 customers. Given that January, February, March is a good quarter in general, I expect probably 1,800 to be a bottom out number, and we can only expect increased customer addition from here on.
Okay, sir, so apart from some concerns on new customer acquisitions, there are also some concerns around rise in employee costs. Can you tell us a little bit more about that? And also, going forward, what are the newer avenues of growth you're looking at?
On the employee side, I think from the 1st of December, the annual hikes have affected, and that is what is resulting into more than expected employee cost that you are seeing. Going forward, I think employee cost plus outsourced sales cost put together would be in line with business operation, and we do not expect any significant deviation from there. On the future side, on the revenue, our collections have grown in the past year upwards of 20%, except for this current quarter where it has only grown 17-odd%. Given that the deferred revenue has also grown by about 25%, we expect the near-term revenue from operations to continue to grow at about 20% or 21% as it has grown in this particular quarter. January, February, March is generally a high season quarter for us, and we expect collections to improve significantly, as well as the cash flow from operations to improve significantly.
Okay, all right. Now, I do have a slightly more of a macro question for you. So, considering you interact because of your model with SMEs across the country, I do want to help get some sense of the SME industries. What's the outlook that, what do you think is the outlook in that space? What's the commentary that's coming in from that industry? And also, how is the tier 3 and tier 4 city market performing at this juncture?
So on the overall, if you see, small and medium enterprises are doing better after the 2-3 jolts of, different kind of problems that has happened, whether it is demonetization, GST implementation, or COVID, wave 1 and wave 2. Now I think they are all looking forward to good business. which is seen in the last year FY23 and first half of FY24 also. Given that the micro enterprises, which are still struggling, which are especially the ones which are below the GST registration. As you know, we have about, with any estimates, we have about 60 million plus SMEs in the country. However, there are only 13 million or so which are GST registered businesses. That leaves out almost 80% of the micro SME base out of the GST base. They are still finding it hard to adjust to the new GST regime because they are feeling left out a little bit. So we should look at how to include them better in the overall scenario. I have a lot of expectation from account aggregator framework and OCEN framework so that they can be included in the formal credit network sooner than later, and also expecting the interest rate to come down a little bit as the repo rate has been at the highest level in the last couple of years. So we are also expecting some interest rate relief to come in the next year or so. Having said that, I think the tier 3, tier 4 SMEs have always have this problem of a smaller market and opaque price gains,
Sure.
which is now not possible in the era of internet where every prices are available at a click of a button. So they are definitely feeling some pressure.
Right, point taken, sir, but unfortunately that's all the time we have today. Of course, larger conversation with regard to your numbers is warranted. The stock is up 5.5% odd, and we'll try to have you back. But, you know, I want to very quickly move to the other stock which has reacted sharply to earnings.